When you need to make your next equipment purchase, join more than 100,000 others who have registered to bid at purplewave.com. These bidders trust us to represent thousands of pieces of ag equipment, construction equipment, and vehicles each month with no reserves and no gimmicks. Simply visit purplewave.com to get started and experience the convenience of bidding anytime from anywhere with a company you can trust. Purple Wave Auction. Straight, simple, sold.
Mark your calendars for Spring Valley's 25th Annual Production Sale to be held March 4th, 2015 at the ranch near Agra, Kansas. We'll be selling 100 Angus and 50 Balancer bulls. Sire groups include Power Tool, Cornelian Focus, Infinity, Keneally Shrek, PA Safeguard, Consensus 7229, Keneally Cavalry, Upshot, Angus Valley, and Final Answer. All bulls will be DNA tested for enhanced EPDs and carry our full guarantee. Remember March 4th, 2015, Spring Valley's 25th Annual Production Sale.
We are in Omaha at the Ag Bankers Annual Ag Lenders Conference, and joining us one of the speakers, Dr. Alan Featherstone, Director of the Department of Agriculture Economics at Kansas State University. The theme has been big data, but boy, one of the topics you talked about is maybe one that isn't getting the discussion because we don't think it's there, but seeing more debt than what we may think.
Yeah, one of the things that we took a look at using the Kansas Farm Management records is essentially what's happened to the debt position over the last 10 years or so. In terms of 2005, 2006, we had about 330,000 in debt. That has increased to the end of 2013 to $470,000 of debt per farm. And in fact, the last year that increased by 41,000, and of that, roughly 60% was on the current liability side. And so certainly that debt has been creeping up a little bit. It has been offset by large increases in land values, but certainly if land values would soften and begin to go the other way, that debt picture will become much more prevalent in people's thoughts.
As we saw the grain prices over the last couple of years so high, in Kansas, maybe it didn't impact those in the I states or even in Nebraska, as wheat maybe didn't quite keep up with where corn and soybeans were. So maybe we didn't clean the books off enough. Or are you talking about that current liabilities or input costs and other just kind of daily expenses that we accumulate?
Yeah, and I think it would be both in terms of certainly cleaning out and financing short-term assets in terms of storing grain, and we're probably seeing a little bit more of that this year with the prices. But also if you look at the production costs, those have increased over time in terms of you're looking probably at $80 to $100 more per acre in non-irrigated corn expenses and about $80 in non-irrigated soybean expenses. And so with the decrease in prices and the prices that we're looking at now, certainly there are producers that may be having difficulty liquidating some of those loans that they took. And again, that's probably the big concern I think we need to look at going forward. And I think that's kind of the warning light that would go on the dashboard if we begin to be moving into more serious difficulties.
Well, let's look at, as we're about ready to wrap up 2014, a lot of people are saying this may be some correlations to what we saw in the 70s, where we had kind of a run up and then interest rates finally took off, and we all know what happened in the 80s, and maybe the young folks have read about it. So are there correlations, not necessarily, just kind of based off inflation of kind of where we are then now? Yeah, no, there certainly are correlations there in terms of one of the things that I did in the talk was basically take the situation that occurred from 1979 to 1981, which essentially turned the land market back at that time, and essentially I basically counterfactually simulated with where we were at the end of 2013, and essentially in 1979, excuse me, we saw a increase in 65% in interest payments. We also ended up seeing a 15.7% decrease in the value of farm production.
and essentially doing those same types of increases or decreases to where we were in 2013, we can end up in a situation that we could end up with similar decreases in the repayment capacity of farmers to meet those payments. Certainly, the interest is less of a concern. That certainly would be a small bump, but I think it would be manageable. Probably what concerns me most is the decrease in the value of farm production and just how well we'll be able to move some of those expenses down that have increased over the past 2 or 3 years. The other thing I would be concerned about with the interest rates is more on the macro side. If the Fed begins to tighten money to increase interest rates, we're likely to see a strengthening of the dollar, and that's never good for the Kansas-Nebraska area where farm exports are so important, and so essentially that would cause those prices to decrease a little bit further, again further stressing the financial situation of farmers.
When you talked about the debt levels with these bankers, were there some surprises? Do people come up to you and say, well, that's not in my area, that's not my bank?
I think there's a lot of caution in terms of where the bankers are. Certainly those that lived through the early 1980s don't want to see that repeated, as no one does. But there is some concern with regards to the decrease in the price situation. And again, just to give an indication of where we were from 2013, we're probably looking at a crop revenue guarantee of about 25-26% less on our corn acres and on our wheat acres and our soybean acres. And so essentially, basically, the farmers are going to shoulder more of that risk than they would have 2 or 3 years ago. And the CRC does a good job in terms of yield production, but from year to year, it is susceptible to the market price. And as those are lower, essentially, it does pull some of that downside risk protection that farmers have with those revenue products.
Dr. Featherstone, thanks for your time.
Thanks very much.
Dr. Alan Featherstone, the head of the Department of Agriculture Economics at Kansas State University, has joined us at the ABA Ag Lenders Conference in Omaha. For Ag View, I'm Ken Rogers.